Now, have you missed the tremendous rally that SIA has displayed recently? Let me show you the charts. This one over here, 20% in 1 week. Wow. Then the next one, 60% in total over the last 6 months. Wow. Now, even though we're all not flying much, vaccine news is a definite plus because SIA, they're in the tourism business, which means if we expect reversion to norm, naturally people will start flying and naturally their losses will start turning into profits. If you follow the channel, I've been talking not too favorably about owning SIA shares all the while. So have I actually changed my tone? If you are interested to find out, continue watching on because I'll be sharing with you details and updates. And not only that, I'll be giving you a case study on Citibank and you'll be thinking, what's the relation between Citibank and SIA? So if you're curious, stay tuned. And towards the end of the video, I'll be sharing with you SIA versus SETS and Genting, which I've mentioned favorably in this channel. So if you're curious, stay tuned for it. Hi guys, welcome back. Now, as always, I mentioned that markets are actually a discounting mechanism. They're looking 6 months ahead, they're looking next year and next year. What are projections? Now, as always, I'd like to make an inference on what market is trying to tell us, and I have something very special to share with you, which may sound a little bit crazy, and listen out for it. Is that we should expect travel faster than expected, quite possibly even this year. Sounds crazy, correct? I've seen also news that Mr. Gunn has mentioned to moderate our own expectation. That's why we're all thinking, maybe end of next year, then we can start traveling. But markets are actually not suggesting that. I also understand that IATA has actually previously forecasted full recovery to be only 2024. But actually, that forecast may be overly pessimistic, which we could see a very exponential recovery rate. I have a review of the current performance for SI to show you over here. It's actually quietly recovered from 3% at the worst periods of circuit breaker all the way now back to 25% of 2019. Now that is actually a quiet but substantial recovery. If this follows on exponential curve, we could reach full recovery faster than expected. Now, there's also another reason why the recent share price has jumped up. SIA has actually managed to defer a lot of its purchases for planes. As always, SIA prides itself buying new planes. That's why the service, the travel experience is a lot better. They've actually nailed down a negotiation with Boeing to defer substantial amount of their purchases to future. And that actually means, as what we can infer from this mentioned by UOB Kay Hian, is that a lot of this risk of capital expenditure has been deferred, which is good. SIA may be able to avoid diluting shareholders even further through their mandatory convertible bonds. So that's another good news for shareholders. That's why it relates to share price shooting up. But SIA's benefit, of course, is Boeing shareholders' loss. Boeing's deferment means Boeing shareholders are not going to benefit. But if you're a SIA shareholder, you should be thinking, hey, quite good. Less risk of dilution moving forward. So is it time to buy or sell SIA shares? And let me try to help you find your own answer with this story on Citigroup. Citigroup almost went belly up during global financial crisis. It required government support, similar to SIA right now. Now, as of February 2009, Citigroup announced that US government will take 36% equity stake in the company by converting 25 billion into common stock. Now, that's a little bit similar to what Temasek has done with SIA. They've actually given credit lines, and Citibank also received credit lines of 45 billion to prevent bankruptcy of the company. So that actually salvaged the situation for Citibank. The important story that I will share with you is this chart over here. As you can see, Citibank was previously a 250 billion company. That was before global financial crisis. It plunged severely, correct? And even though government stepped in to save it, it could not recover back to the heydays. Right now, it's been trading between 100 to 150 billion dollars in market cap. Right now, just to share with you, SIA is worth more than $15 billion. And if you compare to 2019's SIA market cap is only $12 billion. Of course, right now, SIA has a lot of cash. That's why if we find the real market capitalization without the cash they have stored up in their balance sheet, SIA is about an $8 billion market cap company. Is SIA able to recover back to its heydays from 8 billion to 12 billion? I do not think so actually. I think it's pretty difficult. In a lot of ways, I hope I'm wrong because I'm a fan of the Singapore brand. But again, expecting it to recover back to 12 billion is not as easy as it seems. And let's move on back to the Citibank story, which is also an important point that I'd like to highlight to you if you're interested to invest in the SIA. Citibank's shareholder, which is now partially the government, they have actually sold out of Citibank after the whole emergency rescue was done. Of course, there's certain necessary obligations to do that, but also it reinforces a point. When you invest into a distressed company, you are investing into a turnaround story. At the point of maximum risk is where the point of maximum reward is, because the company could have really gone belly up and became bankrupt. But if the company survived, then there's a lot of reward on the upside. This is not easy as a long-term investment. It's meant to be a turnaround story. As an investor into the company, you need to know when the maximum risk reward actually is. And that's not easy for retail investors. Retail investors are better off buying REITs, whereby it's a lot more stable, rather than investing in distressed companies and trying to estimate when the real recovery is trying to turn over. That's my main story sharing with you. Citigroup comparing it to SIA's story today. If you're looking to buy SIA today, let me share with you further data points for you to consider. At current share price of almost $5, you realize that it is actually more expensive than the mandatory convertible bonds conversion price of $4.84 only. Now, if we assume that SIA manages to buy back all these MCBs and do not need to dilute shareholders further, let me share with you previous projection made by the management itself. What you see over here using financial 2019, which was the last normal year before COVID-19, you realize that even without the MCB conversion, they've actually diluted shareholders substantially already. At that point of time, they had to do rights issue. And with the rights issue, the share base was diluted further, and the earnings per share is only at 23.1 cents. Now, if the share price you're buying today is at $5, that means you're paying a price earnings ratio of more than 20 times. Now, does that make a lot of sense? Think about it. I've actually a further data point to show you, so let me flash this up for you to see. What you realize over here is the net asset value, even assuming that all the mandatory convertible bond is not exercised, the NAV is actually at $5.28. Which means if you're buying at current share price of $5 plus, you realize that you're actually paying close to the book value itself. And do you know, SIA had been trading for many years below its book value. So think very carefully, do you want to buy at book value right now, where previously you had so many opportunities to buy it at below the book value? Now, smash that like if you have benefited so far and continue watching on, because in this next section I'll be discussing investing with SIA as compared to investing with SETS and Genting, which are also two well-known brands. And before we get there, let me introduce you to today's sponsor, which is Skillshare. Now, to produce this video, it takes about 8 to 10 hours. There's research time needed, there's filming, there's editing. And all this work is on top of my normal work as a financial advisor and family time that I need to spend with my kids. So if you're also looking to build a project for yourself, think very carefully. You need to optimize your time a lot better, correct? And there's none other than Thomas Frank, who is a trainer on Skillshare's masterclasses. Now, if you check out Thomas Frank, you realize that he has a lot of tips and a very well-structured program. I've actually made changes to my calendar and adopted an idea from him, doing a review on the week. Now, there are also many productivity experts on Skillshare itself. That's why I encourage you to sign up using my trial links below. Hopefully, it helps you improve yourself and your day so you can accomplish a lot more moving forward. To learn more on Skillshare, the first 1,000 to click the link in the description below will get a free trial of the Skillshare Premium membership. Let me start with it by sharing with you SETS, which is actually a very service-based business. As I've covered in previous tutorials, SETS actually spends about 50% of its expenses on labor, which means human resource based in a lot of ways, unlike SIA, which is very asset based in aeroplanes itself. The risk of managing staff costs and the risk of managing plane depreciation is very different. That's why when COVID-19 hit, you realized in this chart that SETS actually lost way less value than SIA. SIA was really threatened with all the loans it had and commitments on buying planes. That's why SIA actually tumbled a lot more. Both of them are actually very intertwined. They are all based on aviation in some way or another. And as an investor, what you want is look for one that's lesser risk and yet have at least the same level of return. That's why I've always mentioned that SETS looks safer bet in a lot of ways. Let me share with you business numbers today, which are actually looking increasingly better. If you look at the flights handled, you realize that third quarter financial 2020 is actually at an increased level again. And what about for amount of cargoes that it's been handling? Because SETS is a lot into handling cargoes. You realize that the numbers have jumped significantly. What about gross meals provided? They actually provide meals on airplanes itself, and that's actually increased slightly. What about for passengers handled? The numbers also increased. Now, SIA actually turned profitable for operations in October to December 2020. And that, in a lot of ways, is actually partly contributed by government's job support scheme. But in any case, government has announced that they are extending that scheme. So if you are investing in SETs, that's actually good news to hear. Let's move on to Genting. And Genting has actually reported its full year financial for 2020, and they've actually turned a profit. No doubt they've actually benefited also from job support scheme, but being profitable for the whole year means Genting, unlike SIA, was never in distress. Maybe we've all done a lot of staycations, that's why they're still drawing in some revenue and profits. But let's look at the key part about Genting, the real kicker, which is actually an update that management has given. They seem to be very confident about Yokohama Integrated Resort bid, and if indeed they do win that bid, you should expect a revaluation of Genting stock. Now, let's compare the share price movement of Genting versus SIA. You realize that Genting stock actually lost much less in the way down. That is actually a good sign. It was not distressed, unlike SIA. And of course, when things look better with vaccination, they also recovered, which means you get a much easier volatility ride as an investor. And always, I suggest going the easier path than picking a distressed company like SIA. And even moving forward, I do prefer waiting for periods of correction for Genting and SETs to get invested more as compared to looking at SIA even. So hopefully this tutorial has helped you in some way understand investing a little bit better. And if you haven't seen both presentations for Genting and SETs, let me invite you to either of this. It will share with you a little bit more on their operations and how you can actually think better as an investor on these two brands. So with that, I'll sign off from here and see you there. Take care and goodbye.